Beijing is under lockdown.
Major Chinese city is near lockdown after record COVID cases and iPhone worker protests.
Malls and shops were shut in the capital city, with authorities imposing localized lockdowns and other curbs. Frustrated Beijing residents shared their struggles. They hope the policy will ease soon. The unrelenting zero COVID push has caused fatigue and resentment among the population as the pandemic's third anniversary approaches.
Though not a full-on lockdown just yet, the government has started to restrict movement in many neighborhoods. More than 300 are affected, and we also know that food is really in short supply right now. Residents worrying about a potential lockdown as many parts of the city are in restriction mode. People are not allowed to enter public places like shopping malls. Schools have been shut down. Workers have been encouraged to work from home.
The Chinese capital is the latest to go under severe restrictions as the communist regime tries to contain the latest spike in COVID-19 infections.
Just a couple of weeks after China said that they're going to be loosening up on their zero COVID policies, we are now back under lockdown as many parts of Beijing are under lockdown as cases are surging. And that's what I'm going to cover in this video. So guys, if you haven't done so, smash that like button and let's go. What's up everyone, and let's get right into this one because this is one that we were expecting as we were seeing COVID cases increase in China. A lot of us were concerned, or a lot of us were at least perplexed that they would loosen COVID restrictions as we go into the winter season, which is of course the flu season. And so we really didn't understand what the point of that was. Now we're seeing that it's kind of backfiring and COVID lockdowns are starting to be reintroduced into parts of China. So let's get right into the article. It was reported that Beijing is grinding to a halt as China's capital city is now battling with more COVID lockdowns. And so more and more apartment compounds in Beijing were closed as of Friday, which forbade residents from leaving for just at least a few days. And this comes as mainland China has now reported more than 31,000 COVID infections as of last week, and so it's probably a lot more now. And so although they are a little bit optimistic in these news reports, I'm a little bit more pessimistic, and I expect further lockdowns in the economy. And this is what I mean about the media being a little bit optimistic on this. They're saying that the COVID measures or the lockdowns are somewhat targeted, and I have nothing to dispute the fact that they are targeted, and they can range from just a few days to weeks or longer. But if you're having surging cases to the point where you have thousands and thousands of cases across the country, I can't imagine why you wouldn't have widespread lockdowns and greater lockdowns, and lockdowns lasting for a range of time that is longer than what they originally thought they would last for. I mean, at the end of the day, we are in flu season. So if you're going to loosen measures right now, expect COVID to surge, and that's exactly what we've been doing. And so we've been watching out for this, and now it's starting to happen. And so what really matters is how does it impact our investment in Alibaba? And I'm going to show you exactly where this is going to impact Alibaba's results as we look into the next quarter's results. Well, you can see here, this is slide number 8 of their last quarter's investment results. And notice that I have Taobao and Tmall highlighted on the top left. And the reason why I have Taobao and Tmall highlighted is because notice that they fall in the customer management segment. That's what I've highlighted here on the bottom right. And this is where lockdowns are going to hurt the most, because even if Taobao and Tmall are making sales online, the shipments may have to be canceled due to shipping delays, lack of product, or lack of ability for the supply chain to execute in any way, shape, or form. And this is exactly how it happened in previous quarters, and I expect further pain on this line going forward. And so what this means is that as we forecast out China commerce, at least that segment, we have to pull it backwards. But the other thing that we have to think about is the reason why Alibaba's cloud segment has been slower is also because of the slowdown in China. So you almost have to look at every segment and really think about whether or not we need to pare back our growth expectations. Now, the good thing is for Alibaba Cloud, I already pared down my growth expectation, but for China commerce, I got to bring it down a bit more, and this is what I mean. So you can see here that China commerce retail, I originally had this at -3% for the year, but because lockdowns are persisting, I have now taken that up to -5%. Now, I think wholesale does well, but that could also come down. I expect China commerce to recover in 2024, but at this point, I don't know when these lockdowns are going to end. So I remain pessimistic on fiscal year 2023, but I could very well bring down my numbers for 2024 and beyond if they continue to struggle with this. The one key item that I'm looking forward to, or I'm really hoping that they announce for China as they try to loosen COVID restrictions, is they gotta allow mRNA vaccines in the country, whether or not they're Western developed or not. They just need them in there. They're better vaccines. They're better than the ones developed in China. They need them if they want a sustainably open economy. And now you saw that model where I took down my expectations. So if you're wondering where that model comes from, it's actually available at the lower tier of the Patreons, and you can get access to that at the lower tier of the Patreons. Now, let's get right into the valuation. So you can see that I'm valuing Alibaba with a lower terminal multiple, which I started doing last quarter, at 15 times earnings. And even with this lower expectation, I still value the company at approximately $230 per share. And the reason why the valuation has gone up is because we saw some recovery in certain segments. And so do we have to pull this back? I think because the share price is so low relative to its intrinsic value, it still remain a undervalued opportunity. So I still maintain my position in Alibaba. But what we have to be aware of is that Chinese names can remain lower for longer. And so you're in it for the long haul if you expect this revaluation to occur. But in the meantime, the company is still making free cash flow. They're still buying back shares. And so we're still generating a return as owners of Alibaba. And new data is coming out on the Chinese economy, and as you would expect it, the China factory slowdown is actually worse than expected under the weight of COVID policies. But in addition to the COVID policies, the other item that's been impacting the Chinese economy is something that I've been calling out on this channel for a while, but I haven't really been reading in the newspaper a lot. We're starting to see it now, is the falling global demand for Chinese exports as Western economies pull back because of the higher interest rates on those particular economies. And so as we go into this Christmas season, we're going to be seeing, I think, lower level of economic activity in the West, and of course that impacts China. Now, the best way to look at the economic activity for factory activity in China is to look at their PMI information. And before I go into that, I just want to remind you guys that approximately 80% of the watch time on this channel is from people that are not subscribed. So if you have the opportunity, please hit that subscribe button. Now let's go right into China's NBS Manufacturing PMI, which is their Purchasers Managers Index. And it actually fell unexpectedly to 49.2 in October of this past year. And as you can see, throughout 2022, it's really struggled to get above 50. Now, recall, guys, that anytime the PMI is above 50, it means that the economy is expanding. If it goes below 50, that means the economy is contracting. And so for the most part in 2022, the Chinese economy looked to have been contracting. Now, this is just one measure. It's not the best measure, I would say. The GDP is obviously the best measure, but this is more forward-looking. The GDP is more backwards-looking. And so this is just a little bit more information. So just as I said, the PMI index fell to 49.2 from 50.1 in September. And once again, a reading below 50 indicates a contraction in activities. And so the real issue here is that irrespective of what the Chinese government has been saying, the fact that they continue to embrace lockdowns when they get a surge in infections tells you that the country is determined to stick with its zero COVID strategy. So as much as we want to say that the zero COVID strategy is loosening, it might be loosening in certain areas, but they're definitely sticking to it in others. And so that data point points to the fact that there's a risk of disruption to factories and supply chains as new cases of viruses continue to emerge in key manufacturing and logistic hubs. As an example, Foxconn, you guys may not have realized, they're a manufacturer for Apple, Apple's biggest supplier, actually has been dealing with shutdowns for the last little while. And they explain it here where they say that many of the hundreds of thousands of workers at the Foxconn site have been placed in isolation in a bid to stop the virus from spreading. And this is a little bit of an older article. The number is a bit higher right now, but as of essentially Halloween, 47% of China's gross domestic product, which represented the number of cities, were under some form of mobility restriction, according to estimates that were being made by Goldman Sachs at the time. And we're running into a situation now where people are fearing that there might be permanent scarring as more manufacturers and service providers lay off workers and slash wages. And so you really have to think about that if you're going to be an investor in China. How long does this last? I personally don't think that there's going to be permanent scarring, but I do think that it'll be slower to bring the economy back online. But I just think that this has been a really rough experiment for China, and if you're an investor in a Chinese security, you have to be aware of this stuff. Now, on this channel, I am a bull on Alibaba. I am a bull on the Chinese economy. However, we have to acknowledge that there are some very real risks, not just with COVID lockdowns, but with their real estate bubble. They have a debt crisis. And in addition to that, the slowdown of the Western economies and the decoupling of the US and Chinese economy as well. And so I know that they've sort of backtracked on that and they're trying to work together, but there's still great risks there. So there's a lot to think of. I would definitely not throw the same multiples that I would on US technology companies, on Chinese technology companies, but I would have to take everything with a grain of salt and say, hey, look, the company is still doing well. Alibaba is still firing on all cylinders. Irrespective of the Chinese lockdowns, they're still doing fantastically, but we have to be aware of the macroeconomic considerations that could impact them. And we have seen these items flow through into the financial statements from Alibaba. So we'll continue to watch them. I'm still a bull on Alibaba. Let me know what you guys think in the comments below. Now, if you haven't seen it yet, I actually did a video on AMD, which is a great chip maker, and you can actually get to that video right here.